Thanks for joining us in our newsletter. As we anticipated, we will be looking at the US economy and the impact on short term rentals. We're going to take a closer look at the 2025 numbers for Miami, and then we will dive into 2026. What are the tendencies for these coming years regarding big events and guest behavior? So you might already know, but the US is right now in what they call the K-shaped economy, basically the feeling that rich people are doing better while poor people are struggling day after day to keep just the same lifestyle they used to have. This is a product of all the efforts that the US government has put in reactivating the economy after COVID, and that created inflation. So rich people or people that have assets like real estate or financial instruments have seen their their total assets increase in value way above the levels of inflation, while poor people or people whose only income is the work hours, the job they can provide to the market, they have not seen those salaries increase in the same rate as the inflation, and therefore they're struggling in this K-shaped economy. Now, what is this phenomenon causing to discretionary expenditure, which is very relevant for us in the vacation rental industry? Well, we see that airfare tickets for first class are doing great, outpacing the economy. Fine dining restaurants have growing waiting lists, while budget family kind of restaurants are struggling just to stay open. 2024 and 2025 were awful years for restaurants in Miami. Same things happens with clothing, Lulu brand and those kind of Alo, those kind of premium brands are thriving, while the old classic budget brands are struggling to just keep their levels of sales. Look at the travel data. $1,000 nights at hotels are booming while budget hotels are cutting rooms. And same contrast in grocery, car brands, top brands booming, making record sales, while entry level models are losing a lot of market share. Now, if you think about this in terms of the pricing in short-term rentals, you will find that luxury properties are holding the value, are being able to push the rates higher, and middle market and lower end properties are struggling the most. This study says that most Europe rentals sit at the low end of the market. In Miami, I think that we see a lot of middle market properties, because if you think luxury in Miami, you got a very exclusive properties to be targeted, to be categorized as luxury. So most condos, I would say, they are in the middle market, which for a South American and Latin American spending $400, $500 a night is still catering to the very high level of Latin America. But in terms of property and the portfolio that there is in Miami, these properties are middle market because luxury properties are way out of league. So what are these properties doing? Luxury properties are keeping their value, are even pushing the rates higher. Middle market properties have to either compete with the growing inventory or reposition if possible. If you have a house and you can add a jacuzzi, another bedroom, improve the TVs, you might be able to enter that luxurious market. But if you have a condo, it's harder to get this done. And then the budget properties, they're just starting to discount the prices earlier to optimize occupancy. So this is a very complex situation for a Miami portfolio. Now, if we take a look at the whole vacation rental industry for 2025, we can see that the occupancy level, this is national, the US total US market, it went back to pre-COVID levels, 41%. So it started growing in 2021, and from then on, it started going in the opposite direction until it came back to its 41% average occupancy. Now, the good news is that the average daily rates have have repositioned at 309. They were going down since 2021, but they have reached a new level of 309. If you look at the pre-COVID IDR 248, this was a this was a very rewarding experience for the ADR. I mean, it has been great in increasing the value of rentals. And this translates into the RevPAR, the revenue per available room. We see a RevPAR of 125 when it used to be 101. Now let's take a closer look at Miami market 2025. We see that the inventory has kept growing year after year, 18% more rooms for sale last year, and the demand was 15% higher. So we are still growing in demand, but it's hard to keep up with the inventory increase. So this has no other result than a decrease in occupancy. 2.5 decrease in occupancy for last year. The average daily rates lost 6% from 285 to 269, and that resulted in a RevPAR of 139. Now, this is the most important KPI in the industry. This is how much money you make per available night that you put on sale. So let's say last year you left 300 nights on sale for your property, and you made $30,000 in revenue. That equals $1,000 of RevPAR, because for every single night, if you booked it or not, you made $1,000. The average length of stay keeps shrinking, but it has stabilized at 4.5. Booking window 37 days, which we will see later on. This seems a lot. It's really becoming shorter than this. And the average stay value $1,200. That's 10% below 2024. This shows how seasonal the Miami market is. You can see that after March, no other month is able to break that 60% occupancy level. And even some months are very hard, like September, 34%. That's almost 2 out of 3 properties are empty in September. And after April, let's say half the properties remain empty every single month. So this is a big challenge that we face in this market. And last year, it became even more, the low season became more evident than 2024. So the occupancy went back 1.4 points, but still, if you look at the U.S. national average, Miami is almost 11 points above the average. So it's a very touristic market. It has a lot of portfolio, but still a lot higher than the U.S. national. If we look at the ADR, the average daily rate, we see that last year the rates decreased an average of 5.6%. That's $16. The US national number remains stable. And again, you can see how seasonal this market is. You can have a ADR of 343 in March and 178 in September. So this is half the price. That's all the rates go all the way down from March until reaching the bottom in September, but they go almost as half the price. I mean, that's a very dramatic decrease in price. Looking at 2026, this is for the first quarter, January through March. Again, the inventory keeps booming, 25% more nights on sale on the first quarter, 20% more nights sold. So demand is growing, but it's outpaced by the inventory surplus by almost 5 points. Occupancy then it has no other result but to decrease given this dynamic. So we're losing 4 points of occupancy, and the ADR is pretty stable. So it's $3 more. As you start booking and getting closer to the check-in date, this rate will go down because property managers start giving more discounts on unsold inventory. So this price will keep going down. RevPAR again, our most important KPI, 163. Average length of stay, pretty stable, 4.8. booking window 45 is longer for this high season. We will look more specific data on this number, and then the average stay value 1600. 2025 average was 1200. So of course, the first quarter is the high season, is the best season of the year. If we look at pacing, and pacing is actually what's the occupancy as of this day compared to the same time point in the year last year. So today, the first quarter is sold 48%. 48% of the nights in the first quarter were sold. That's a decrease of 1.2 points compared to last year. Last year it was 50%, and then 62% was the effective occupancy for this period. So we are standing in the middle of February, almost here. So we still have a good bit to go, and hopefully this solid line will start looking closer to this skater line, which was the final occupancy. But still, we can see the last year we were selling these nights better than we are this year. And the ADR is growing, but this is also very common when you see the pacing in a quarter that hasn't finished. As you get closer to the end of the quarter, this rate will keep coming down. And proof of this is last year data. At this point of time, we were 337, and it ended up being 323. So we lost $14 between now and then. And most likely, operators will start offering heavier discounts if they don't sell the nights. Therefore, this number will decrease, but hopefully we will remain about the 323 of last year. Now, this is data sourced from Airbnb. Airbnb is 45% of the OTA market in the United States, and it's probably around 60% in Miami. Demand on Airbnb for Miami stays, look at the numbers for the first quarter, 9% down, 11% down, 10% down for March. Now, what really caught my eye was the lead times of this reservation. 48% of the bookings for the Miami market are coming in just 14 days or less before the check-in day. So pretty much everybody is booking very last minute, and actually 20% of the stays are being booked just a day or the same day of check-in. So travelers are pretty much booking the stay at the airport. They know they will find a place. There's so much inventory in Miami that they know they're not going to run out of places. And probably they will get a better deal because a lot of operators are heavily discounting the nights if they don't sell it by 14 days before the check-in date. So we have encouraged the guests to do this. Actually, we need to start holding the prices for longer so that we don't see these lead times keep shrinking. And then the length of stay, 74% of the reservations are for 4 nights or less. And 1 night reservations is shockingly 16% of the stays. So many apartments, many owners, many operators, we don't want to cater to 1 night stays, but it's almost 20% of the market now. So if you think that you are going to be booking your property for 5 days or more, you're only attending to less than 20% of the market. So that's how dynamic the Miami market has become. Now let's take a look at the big events of this first quarter and then the biggest event of the year. The Miami Open, 7th week of March. We can see occupancy pretty much the same. I mean, this is pacing. This is how many nights we have sold at this point of the year. It's the same as last year. The rate seems to be a little higher, but it's pretty similar, and this will keep going down as we saw before. Formula One weekend, we were always we had a lot of expectations for this event, but none of the past year has shown an occupancy higher than 65%, which is very average for May. So this year we're pacing a little behind, 6 points behind, 12%, 13% last year. But the rates are going down as well already. So even before this event, we see that the rates are already going down. And now, finally, the biggest sport and probably of any kind of event that we can think of, the Soccer World Cup coming to Miami this year, June 12th, July 19th. If you can avoid these days to visit your property and try to make some revenue, great time to rent your property. 5% occupancy in Payson compared to 4.8 last year. So in a nutshell, there's not much demand for the World Cup yet. It's too soon to anticipate what the occupancy is going to look like. We do see that the prices are already 22% higher than last year. So the nights that we're selling for these dates are on average 22% more than last year. Again, in most cases, the closer you get to the check-in date, the lower the rate. Now, the World Cup may have the opposite effect. More people interested in coming because they know their team is going to be playing the first leg of the playoffs, so they want to be in Miami, and the tickets will go for more. But for now, 22%, of course, I will take it anytime, any year. Now for the World Cup, I think that the market has very high expectations. I have seen rates 2x, 3.5x. What's the average rate for that time of year? And so far, the bookings that came in are only 22% higher on ADR than the average. So that's something to keep in mind. The World Cup still is not very relevant in the calendar. The rates are looking higher, but we need to wait to see what really happens. That's all on our side. If you want to take a closer look to a specific area of Miami, this is a very big and diverse market. If you want to take a look specifically at the 3-bedroom or studio, just let us know and we will gladly schedule a call with you.